Namaste, and welcome back to Cafe Innova, where finance meets innovation. This is part 2 of 10 lakh, the complete investment blueprint. Let's begin.
Slide 6 Avenue 1 Equity Mutual Funds. Our first investment avenue and one of the most powerful wealth builders available is equity mutual funds. We recommend allocating 3 lakh rupees, 30% of your portfolio, to equity mutual funds. Why now? Because the RBI's rate cut cycle is a game changer for corporate earnings. AMFI February 2026 data shows equity mutual fund inflows rose 8% to 25,977 crore rupees, showing strong investor conviction. Goldman Sachs expects 16% corporate profit growth in financial year 2027 and has set Nifty at 29,300 by end 2026. Motilal Oswal forecasts 10 to 15% Nifty returns in 2026. How to split your 3 lakhs? 50% into a large cap index fund, UTI Nifty 50 or HDFC Nifty 50, 25% into a mid cap fund, 15% into small cap, and 10% into a flexi cap fund. Expected returns 12 to 18% per annum over 3 to 5 years. Slide 7 Avenue 2 Direct Stocks. Our second avenue, direct stock investing, with a recommended allocation of 1 lakh rupees, 10% of your portfolio. In April 2026, sector rotation is critical. The hottest sectors? Number 1, Defense. HAL, BEL, BDL, and Bharat Forge, Motilal Oswal forecasts up to 38% upside, citing rising global security concerns and increased defense spending. Economic Times, March 2026. Number 2, Pharma. Sun Pharma and Dr. Reddy's, defensive plays with strong export potential. Number 3, Renewable Energy. Adani Green and NTPC Renewable, riding the government's green capex push. Number 4, Infrastructure. L&T and IRB Infra, benefiting from government capital expenditure at 3.4% of GDP. A word of caution. JP Morgan warns that Nifty and Sensex may face 10 to 12% downside risk from an oil shock. JP Morgan India Strategy, March 2026. So position carefully and set stop losses. Slide 8. Avenue 3. Gold and Silver, the Crisis Shield. In times of war, gold is not just an investment, it is financial armor. We recommend 1.5 lakh rupees, 15% of your portfolio, in gold and silver. Look at these verified numbers. JP Morgan expects gold prices to push toward $5,000 per ounce by Q4 2026, with $6,000 a possibility long term. JP Morgan Global Research and Reuters, February 25, 2026. Goldman Sachs has raised its 2026 gold forecast to $5,400 per ounce. Goldman Sachs Research 2026. MCX Gold in April 2026 is at a record 1,54,200 rupees per 10 grams, 5 paisa and MCX. And AMFI January 2026 data shows gold ETF inflows hit 24,039 crore rupees, at par with equity mutual fund inflows for the very first time. SEBI has even allowed equity funds to invest up to 35% in gold and silver. Bloomberg, Reuters, February 26, 2026. How to invest? 70% in sovereign gold bonds or gold ETFs, 30% in silver ETFs. Slide 9. Avenue 4. Defense Stocks, the War Dividend. This is the slide that could genuinely change your financial trajectory in 2026. Defense Stocks. Motilal Oswal forecasts defense stocks can rally up to 38%, driven by rising global security concerns and increased global defense spending. Economic Times, March 2026. HDFC Securities HSIE Research highlights 3 defense electronics firms with up to 30% upside. Motilal Oswal and HDFC Securities, 2026. The Nifty India Defense Index has delivered 32.51% one-year return. HDFC Securities, March 2026. India's government has set a target of 25,000 crore rupees in defense exports by financial year 2025-26. Ministry of Defense, Government of India. Top picks: Hindustan Aeronautics Limited, HAL, for air defense. Bharat Electronics Limited, BEL, for radar and sonar systems. Bharat Dynamics Limited, BDL, for missiles and ammunition. and Bharat Forge for defense exports. Recommended allocation 75,000 rupees, 7.5%. But remember, geopolitical premiums can deflate. Set your stop losses. Slide 10, Avenue 5, REITs, real estate without the hassle. Avenue 5 is one of the most underrated options in India. Real estate investment trusts, or REITs. Forget the hassle of buying physical property, dealing with tenants, or paying stamp duty. India's REIT market hit $18 billion in market cap in 2025, projected to reach $25 billion by 2030. Economic Times and Collier's research. SEBI reclassified REITs as equity-related instruments from January 1, 2026. SEBI Circular, November 2025, and Outlook Money. JLL India's Emerging Horizons report places India's REIT growth opportunity at 10.8 trillion rupees, approximately 130 billion US dollars. REITs and InvITs outperformed traditional indices in 2025. Top REITs: Embassy Office Parks REIT, Mindspace Business Parks REIT, Nexus Select Trust, and Brookfield India REIT. Recommended allocation 75,000 rupees, 7.5%. RBI rate cuts mean cheaper borrowing costs for REITs, boosting their valuations further in 2026. Slide 11, Avenue 6, Fixed Income, the Safe Fortress. Not everyone is a high-risk investor, and that's perfectly fine. For the part of your portfolio that needs to be safe, reliable, and predictable, we have fixed income instruments. Recommended allocation 2 lakh rupees, 20% of your portfolio. Current rates for April 2026, all sourced from India Post and Ministry of Finance. Public Provident Fund (PPF) 7.1% per annum, completely tax-free, 15-year tenure. National Savings Certificate (NSC) 7.7%, 5-year lock-in, 5-year post office fixed deposit 7.5%. Senior Citizen Savings Scheme 8.2% for investors above 60 years. Bank fixed deposits from top banks 7 to 7.5% with flexible tenures. And as per a Reuters poll from January 29, 2026, the RBI is expected to hold interest rates steady at 5.25% through 2026. This means lock in these high rates right now before they potentially fall further. Think of this as your financial sleep insurance. Guaranteed returns, zero market risk. Slide 12, Avenue 7, Sovereign Gold Bonds, the ultimate gold investment. If you are going to invest in gold, and in April 2026 you absolutely should, then sovereign gold bonds or SGBs are the best way to do it. Here is why. SGBs pay you 2.5% annual interest on top of whatever gold prices do. If gold gains 15%, your SGB gives you 15 plus 2.5, 17.5% total return. But here is the real kicker. When SGBs mature after 8 years, all capital gains are completely tax-free. Zero tax on your gold profits. SGBs are issued by the Reserve Bank of India on behalf of the Government of India. Zero credit risk, as confirmed on rbi.org.in, with JP Morgan targeting $5,000 per ounce by Q4 2026 and MCX Gold at record highs in April 2026. SGBs could potentially give you 3 to 4 times your initial investment, completely tax-free over 8 years. Watch for the next RBI tranche announcement and subscribe immediately. Slide 13, Avenue 8, Debt Mutual Funds, smarter than fixed deposits. Our 8th avenue, debt mutual funds, might be the most underappreciated opportunity in today's market. When the RBI cuts interest rates, bond prices go up, and debt mutual funds, which invest in bonds, capture those price gains and deliver returns better than fixed deposits. The RBI cut rates by a full 100 basis points between February and December 2025, as per RBI MPC statements. Long duration funds can deliver 9 to 12% in this rate cut environment. Dynamic bond funds 8 to 10%. Corporate bond funds 7.5 to 9%. Liquid funds 6.5 to 7% for your emergency corpus. As per Reuters, January 2026, RBI is expected to hold at 5.25% through 2026, making this the ideal window to lock into long duration bonds. Top picks: ICICI Prudential Bond Fund, Kotak Dynamic Bond Fund, HDFC Corporate Bond Fund. Recommended allocation 1 lakh rupees, 10% of your portfolio.
That's all for part 2. Stay tuned for part 3.